Now, countries like Senegal, Cote d'Ivoire, Uganda, Kenya, and Ethiopia have one thing in common. The IMF pegs their expected growth in the high single digits, making them attractive investment destinations. Ridle Markus, who's Sub-Saharan African macroeconomist at Absa CIB, joins us with more detail around the investability of some of these markets in and around Sub-Saharan Africa. Ridle, thank you for your time this afternoon.
Good afternoon.
Well, so it actually looks like Sub-Saharan Africa may have a buoyant 2024, at least when we look at the data that is out there. I'm keen to get your thoughts on the overall picture. Of course, it's seldom homogenous, but what will drive some of this growth, also considering the global growth picture?
Yeah, so thank you. It is likely to be, well, at least we always start off with, on a very promising note when we look forward to a new year. And we believe that there will be a couple of countries that will most likely surprise. But I'm also very mindful that, that with all these upside surprises, there's always some downside surprises. And I think given where the global backdrop is, we know that the IMF believes that it's going to be another tough year this year. We just saw the World Bank report coming out a couple of days ago that also suggests another tough year in 2024. It is going to impact the Sub-Saharan or broader Africa landscape quite negatively. At the moment, we haven't seen, tight global financial conditions means that it is very difficult to issue, for example, in international markets. We've just had Ethiopia becoming the latest African countries to default on its debt. We know that there's debt restructuring underway in several markets, talks underway in several markets, including Zambia, Ghana, etc. So there are a couple of markets where, things are still fairly challenging. But broadly, I think, that there are a couple of markets, of course, where we believe that growth is going in the right direction. And some of the West African names, such as Senegal, Cote d'Ivoire, really stand out. And that is on the back of new oil and gas discoveries that will be added. In Cote d'Ivoire's case, they started production last year and hoping to ramp it up. But in Senegal's case, we're hoping that by the second quarter of this year, we will see that oil and gas coming through. So the oil and gas story is certainly going to be a strong driver of growth, along with infrastructure spend. But yeah, as I said, there's always some risks, including very volatile weather conditions, global backdrop, and then obviously some local issues, including elections in some of the markets.
I'm keen to speak about that, political risk in Sub-Saharan Africa. When we look at these very upbeat numbers, Senegal expected to grow at around 8.8%, Cote d'Ivoire 6.6%. What we do see in election years is what I would call policy paralysis. It's just not the time for, bold policies, and many governments hold back and really favor to electioneering. I'm keen to find out if that has been factored into the numbers that IMF presents to us at this point.
I do think the numbers have been included. In, I think Senegal's case, we are lucky, or Senegal is lucky that the elections are happening fairly early on. It's around the 25th of February. So, once elections happen, hopefully they go smoothly. We can look forward to moving on to the next target for Senegal, which is the beginning of oil and gas production, as I said, by Q2. There was obviously a delay in the FSPO. And we're hoping that everything is now in place and that they will be getting ready for that. So the sort of 8.8%, 9% growth for Senegal does not look unreasonable. At the same time, Senegal is very well supported by multilaterals, just like Ivory Coast. Ivory Coast started production at the Bayline oil field last year, and we're hoping that they will ramp up production fairly quickly. But Ivory Coast, as you mentioned, also has elections due next year, and we still need to see whether Ouattara will be running for another term or what's going to happen there. We know that Macky Sall in Senegal is stepping down, and the leading candidate there is Amadou Ba, the prime minister. But as you rightly pointed out, this is not a time for policy paralysis. So I'm hoping that with the multilateral involvement in many of these markets, including Ivory Coast, that would add more momentum to the growth outlook. That has certainly been the case for, I suppose, Ghana, Kenya, even Zambia, where multilateral involvement has been fairly strong. We know that Ethiopia has got some local political challenges, But they too are in talks with the IMF for a program, hopefully around 3 billion, 3.5 billion. And hopefully they get this program sooner rather than later, which will come at a very, good time for a country that has just defaulted.
Yes, I actually want to speak a little bit about Ethiopia because they're also in a bit of a rebuild phase, even though, political risk is still quite high in that environment. And, I just think of the potential of that country in this rebuild phase where infrastructure may have to, be built from scratch. 6.2% is a really good number to see at this point. And it does tell me that, in a few years' time, if they're on the right path, they could even see higher numbers in terms of a GDP. Is the picture that optimistic for Ethiopia, Ridle?
I think you need to take into account that Ethiopia has always been one of the fastest growing markets around the continent. But this is a market that has in the past couple of years been struggling with, political instability, security issues, FX shortages, low reserves, a whole lot of other challenges. So it is certainly a market that, it's been driven by excessive borrowing over the past couple of years, invested in infrastructure. That infrastructure has been damaged by the civil issues. But I do hope, that once an IMF program comes into place, that it will give new growth momentum. Exports so far, agriculture conditions remain fairly strong. So, we're hoping that a combination of the infrastructure investment and the agriculture sector will continue the momentum. But I'm very aware of the fact that given the fiscal constraints, that the infrastructure side may struggle a little bit this year and potentially even next year. So a lot of difficult challenges there for Ethiopia. But I think this, the broader region in East Africa is a fairly upbeat sort of, growth outlook. We believe that Kenya, Tanzania, and Uganda could potentially grow about 5%. So that whole East Africa region is looking quite strong.
Very exciting times ahead. Ridle, thank you so much for this chat. I know we'll chat again sometime soon. That was Sub-Saharan African macroeconomist at Absa CIB, Ridle Markus.